Very good morning, everyone. Hope you all must be doing great. So let's start with our total income questions. So we have done some questions yesterday. Let us come to question number 5 we have done. Everybody, let's come to question number 6. This question says, Ashish is a resident individual. My screen is visible to everybody. Are you able to read it? Good. Thank you, Aditya. Okay. Ashish is a resident individual, age 43 years, provides professional services in the field of interior decoration. So he's a professional and 43 years of age. His income and expenditure account for the year ended 31st March 25 is as under. So we don't have any issues. So it's not a receipts and payment account today. It's normal an income and expenditure account. Income and expenditure account is same like P&L account. So here excess of income over expenditure, it is our net profit. So this is our step number 1. Whenever we will be calculating our PGBP income, so this is our step number 1. Okay. So let us see what the actually this question is demanding from us. This question is saying, compute the total income. Again, we have to compute the total income and the tax liability. See, just the tax liability, not the tax payable. So we need to compute the total income and tax liability of Ashish, assuming he has not opted for the payment of tax under 115 BAC. So again, he is opting for the optional regime. And don't worry, if there is any change in the default also, I will be telling it that wherever there is a change, I will be specifying it to you. Okay. So we understood that this assessee is not a senior citizen, normal, and we have to compute his total income. So we understand one of the total income is his professional income because he's an interior decorator. Let us find some other income he has or not. First, look at the debit side of the P&L account, or I can say income and expenditure account. So if we look at the debit side, just see that whether any of the expenses which we feel should not be allowed, don't look at the amount, just the nature of the expenses. First is employee remuneration and benefit. So it is a normal business expense because it is salary to employees. Office and admin expenses, we are perfectly okay with that. No issues. General expenses, I believe that these are all are business related. So we are okay with it. Electricity expenses, again, I'm assuming that it is for his office or business. So we are okay with it. Medical expenses, see if these medical expenses are for his employees, then we are okay. But if it's a personal medical expenses for the assessee or their family members, then we are not okay with it. So this almost everything seems to be okay. This is a little dicey. So we'll look at the information also. Purchase of furniture. Guys, what do you understand by this? Purchase of furniture. If the assessee has purchased furniture, what it should be? It should be allowed or it should not be allowed. Let's say it's a business furniture. Let's say it's a business furniture. Then what you will do? It should be allowed or it should not be allowed. Purchase of furniture. Very nice. Those of Shagna. Good. Aditya, good. See, purchase of furniture is a capital expenditure, so it should not be allowed. It should not be allowed. First case. Second, now it depends that whether it is for business or for personal. If it is personal, then nothing could be done. It will be fully disallowed and no depreciation also. But in case this is a business furniture, obviously, first of all, we will disallow it. And then only the depreciation we will be able to claim it. It's a capital in nature. So only we will be claiming depreciation on it. Okay. The next one is depreciation. So depreciation, we are quite okay with it unless and until there is any specific information. So we are okay with it. Excess of income over expenditure is nothing but my net profit. Coming to my credit side, the credit side shows consultancy services. This is his normal PGBP inflow. So we are okay with it. It is his consultancy services because he's a interior decorator. Interest on PPF account, is what it is. Interest on PPF account, where it will go. It is not PGBP, of course, we will delete it. Then interest on PPF, where it will go. What do you know about PPF interest? Your thoughts, please. Anything. It could be right, it could be wrong, doesn't matter. Okay. So interest income, generally see interest income are IFOS income. So generally it should go in IFOS. But specifically PPF interest is an exempt income. PPF income is an exempt income, correct Shagna? So this is not a PGBP income and neither any of the other IFOS income also. So PPF interest, please do understand PPF is always an exempt category. Interest on saving bank account. So interest on saving bank account, obviously it's not PGBP, I will delete it from here. But you all know that saving bank account interest is IFOS income. So we will get IFOS income also. And since the assessee is following optional regime, so he is eligible for 80 TTA or 80 TTB depending on the age. So this person is not a senior citizen. So he will be getting, correct Shagna, 80 TTA also. So here we have one deduction, 80 TTA. Whenever you see this saving account written over here, your mind should go in 80 TTA or 80 TTB as the case may be. If the assessee is a resident senior citizen, TTB, otherwise TTA. Obviously, it's not a PGBP income. Interest on national saving certificates. Interest on national saving certificates for third year. What is NSC? So you know that in 80C, whenever we purchase NSC, national saving certificates, we get a deduction. How much in 80C? Maximum 1,50,000 rupees. This is NSC. But once we have, let's say this year, just imagine, this year you have invested in NSC. So you will get deduction of 80C. But from next year onwards, you have not invested it. So you will not get deduction in second year, third year. Whenever you will invest, you will get the deduction. That's it. But let's say in the next year, you are earning interest. So that interest is your IFOS income, obviously. Correct? So that interest is your IFOS income. Here you have not made any investment. Here you have not made any investment. But you are getting your income now. So first year, second year, third year, whatever the interest you will earn until this NSC is matured. So that interest income is your IFOS income. So by interest on national saving certificates, obviously it is not PGBP. So please disallow it from here and take it in IFOS. Please take it in IFOS. So we have 20,000 in IFOS. We have 21,000 in IFOS. But this income in IFOS, it is exempt income, PPF. Second important thing that you should know about national saving certificate is that, see, whenever you invest here, so for example, in first year, just listen to this. Let's say in first year, somebody invested 80,000 rupees in NSC. He will get 80C deduction in this year because he has invested the money in this year. Let's say it's a 5-year NSC. After 5 years, it will mature. So you will get deduction first year, 80,000 rupees. That's it. In second year, third year, fourth year, fifth year, generally no, because you are not investing it. Now in the next year, when you will earn interest, on it, next year, next to next year, next to next year or so, whenever you will be earning interest on it, it would be your IFOS income. No issues. So whenever you will invest, ATC, but when your income is coming, no ATC, only the interest income would be IFOS. But related to NSC, NSC is quite special. Related to NSC, the interest which we earn, we don't take it. The interest which we earn, we don't take it. It is reinvested over there. So in respect to NSC only, guys, not for any other thing. In respect to NSC, the interest which we are earning, that is also, we are not withdrawing it. It is getting reinvested. It is getting reinvested. So interest reinvested is also eligible for 80C. See, the first year we have earned 80,000 rupees. We have invested 80,000 rupees. So first year we'll get the deduction of 80,000. Second year, let's say we have earned the interest of 7,000. 7,000 would be IFOS income also. And 7,000 we will assume it's a interest which is reinvested. You will get 80C of 7,000 also next year. So whenever you will be earning interest and that interest is reinvested, and obviously in NSC it gets reinvested, so that reinvestment is also eligible for 80C. So here they are saying interest on NSC certificates is issued for third year. So it's the third year. We might have purchased some NSC 3 years back. Now we are earning interest. So 21,000 will go in IFOS. First of all, it is an IFOS income. But thereafter, we'll assume that this interest is reinvested. We'll get 80C also. We will get 80C also of rupees 21,000. Please tell me whether you have understood this or not. So summary is, interest earned is also considered as reinvested. Interest earned is also considered as reinvested. Very, very good. Now, next point. So as of now, we see by reading his income and expenditure account, we see that he has income from PGBP. We have seen that he has income from IFOS. That's it. As of now, we receive 2 hits. The following other information relates to financial year 24-25. The expenses on employees' remuneration and benefit includes the expenses on employee remuneration and benefits. These are the expenses. This includes an amount. We are not talking about the entire 1366. This includes an amount. The expenses on family remuneration and benefits includes 2 things. First, second. They are talking about these 2 things. Let us see what are they talking of. Family planning expenditure of 20,000. So it includes a family planning expenses of 20,000 incurred for the employee, which are revenue in nature. The same was paid through account paycheck. So these are paid through account paycheck. So it includes a family planning expenses. Now everybody tell me whether these family planning expenses, it's a revenue in nature. Is it allowed or not allowed? What are your thoughts? You might be right, you might be wrong. Doesn't matter. Please tell me what are your thoughts. And if you don't know, please tell me don't know. Others? Others? Yes, no, don't know. A for allowed, B for not allowed, and C for don't know. Okay. Very good. Family planning expenses are allowed under section 36 only and only to companies. These are never allowed to other assets. Whether they are revenue, whether they are capital, doesn't matter. They are only and only allowed to company assets. Under section 36 it is there, but that is only for the company's assessing. It is not allowed for any other assessing. So for him, it will not be allowed. Only for company assessee it will be allowed. So whenever you will see a debit of family planning expenses, don't get confused whether it is revenue or capital. Please don't allow for individual or any other assessee except companies. In your examination, you will not get for companies, you will get only for individual. So please don't allow them. Correct? For companies also, revenue expenses are allowed. Capital expenses are also allowed, but in 5 installment. But it is only for companies. Revenue expenses all 100% in this year. Capital expenses partially in 5 installments. So here we will not allow it because it's a family planning expenses. Second, payment of salary 25,000 per month. So here there is one more amount included, that is payment of salary 25,000 per month. 25,000 per month. 25,000 per month means 3 lakh rupees. Payment of salary, payment of salary of 25,000 per month to sister-in-law of Ashish, who was in charge of the accounts and receivable department. However, in comparison to the similar work profile, the reasonable salary at the market rate is 20,000 per month. So we have debited 25,000 per month. That is, we have debited 3 lakh rupees, which are paid to the sister-in-law. However, as per the market rate, it is 20,000 per month. That is 20,000 into 12, 240. The market rate is 240 and you are paying 3 lakh rupees. Tell me your thoughts. A, 3 lakh disallowed. B, 60,000 disallowed. C, 5,000 disallowed. D, 0 disallowed. Whether entire 3 lakh disallowed, whether in excess of fair market value disallowed. C, whether 5,000 is disallowed. Or D, whether nothing is disallowed. The answer is D, Raju sir, you are correct. The answer is D, nothing will be disallowed. Everything is okay. We understand that there is a section 48(2) which says that if you pay this amount to your relative in excess of fair market value, so that excess will be disallowed. So if you pay 3 lakh and the fair market value is 2.4 lakh, so the excess 6,000 shall be disallowed if you make a payment to your relative. To your relative. Who is the relative? Sister-in-law is not a relative. So relative is, please write it somewhere in your register. Relative is for individual, and mostly you have to remember only for individual. Relative means spouse. Relative means children. Relative means parents, mother, father and mother, and siblings, brother and sister. That's it. Please apply 48(2) only on them. To family. Family definition is spouse, children, father, mother, brother, sister, dependent, non-dependent, doesn't matter. This is the meaning of family. So if you have made a payment to your relative, then please disallow in excess of fair market value. But if you have made a payment to any other person, then 48(2) will not be applicable. And if 48(2) will not be applicable, so it doesn't matter that whether we have made a payment on fair market value or more, doesn't matter. To non-relative, you can pay any amount. Everybody got it or not? So students who are from the regular fast track batch, they know it. But now everybody understood, na? Good. Good. Now, second, amount received by Ashish. Ashish is an assessee. Amount received by Ashish on employee contribution to EPF. Why he receiving amount? Why Ashish is receiving amount? See, we all know that whenever the employer, Ashish is an employer. So let's say there is a person who is working in his organization. So in Ashish business, there is a person who is working and it's its salary slip. let's say Mr. A is working as an employee and the employer is Ashish. Ashish is the employer. A is working in his business. So Ashish is paying him basic salary 50,000. Ashish is paying him DA, let's say 20,000. So Ashish is paying him 70,000 rupees of salary. Let's say we are paying him 70,000 rupees of salary. But out of the salary, we understand that everything Mr. A will not receive, something will be deducted from his salary. One of the deduction is, the common deduction is employee contribution. Employee contribution. I'm not saying employer. I'm saying employee. Employee contribution to provident fund, to other funds, etc. Right, to pension scheme, etc. So what does company does is, what Ashish, employer, will do it. While paying salary of 70,000 per month to Mr. A, they will deduct. Let's say, for example, commonly I'm saying 6,000 per month is getting deducted. So Mr. A must be receiving in his bank account 64,000. Why? Out of 70 salary, 6,000 is deducted. And this 6,000 is deducted by whom? Ashish. That is the employer. So he'll get this money. 6,000 money, he receives it. So that is the reason it is written that Ashish received 6,000 rupees or any amount. Ashish received this amount first from the employee. Why? Because it is employee's money and we have deducted some amount. And guys, we all know that this money, Ashish, why you have deducted? Because it is a contribution in PF. So it is your responsibility to please don't keep this money for long, because Ashish, it's not your money. Employer, it's not your money. It's Mr. A's money. So please, whenever you receive this amount, PF Act says, or other act says generally, that within next month 15 days, you should deposit this money. Ashish, you should deposit this money. We are giving you a very, very less time, less than a month. So next month, let's say if you have deducted it, for example, in any month, for example, you have deducted in March 31st or 30th, you have deducted it, then please deposit this by 15th of April. And if you don't deposit, this is not employer contribution. See, employer contribution, which Ashish would be depositing from his side, that can be deposited up to the due date of ROI. I'm not talking about the employer contribution. I'm talking about the Mr. A's contribution, employee's contribution, employee contribution. So this contribution should be deposited up to the due date of the act, which it belongs to. Generally for PF, please remember the due date is 15th day of next month. That is, if any month you have deducted it, please deposit it by 15th of next month. Even if you deposit late, if you don't deposit or deposit late, let's say if somebody deposited on 16th, then it will become your income. It will always become your income. And you can't do anything. It will 100% will become your income. And sir, if I'll be depositing after 3-4 days, then nothing will happen. It will permanently become your income. So here it is written. In second point, it is written, Ashish, amount received by Ashish, an employee as employee contribution to EPF. Why he received money? He received money as employee contribution to EPF for the month of February. Guys, it is for the month of February. So it should be deposited by 15th of March. Rupees 10,000 was deposited after the due date under the relevant act relating to EPF. So it is deposited after 15th of March. Why? Because they are saying they are deposited after the due date of ROI or after the due date of the relevant act. After the due date of the relevant act. I'm again repeating, whatever is the employee contribution, it should be deposited up to the relevant act. Whatever is the employer contribution, it should be deposited up to the due date of ROI. So here, this amount was although deposited, but it was deposited late. So it will permanently become your income. It will permanently become your income. Which income? You can make it either PGBP, you can make it IFOS, both are correct. My recommendation, make it PGBP. Which income you can make? Either PGBP income you can make or IFOS income you can make. Both are correct. Please, my recommendation, is PGBP. Have you all understood this or not? Second point. Very good. Third point. Medical expenses of 80,000. There were medical expenses of 80,000 and we were quite dicey that whether they are personal or business. Medical expenses of 80,000 as appearing in the income and expenditure account was expensed for whom it is for? Treatment of father. So we understand that this is a personal expense. It's a personal expense, treatment of father. His father was 72 years old, senior citizen, and was not covered by any health insurance policy. The said payment of 80,000 was made through account paycheck. Guys, what you will do? First of all, it is not a PGBP, you will disallow from PGBP. Then where you will take it? It was the medical expenses, he is not covered by any health insurance, where you will take it? Any thoughts where you will take these medical expenses? Very nice, you all know 80D. Because for senior citizen, if they don't have a medical insurance policy, the medical expenses is equivalent to the premium paid. And how much you will get? I believe you all know 50,000 rupees maximum. So 50,000 rupees maximum you will get in 80D also. Not allowed from 50,000, correct. Here it will be allowed 50,000. And first of all, it is not allowed in PGBP, but however allowed in 80D, but that is maximum 50,000. Now, fourth point. General expenses include general expenses as appearing. So there were some general expenses also, now 75,000. Okay. General expenses as appearing in the income and expenditure account includes a sum of 25,000. Okay. So they are not talking about entire 35. They are talking about only 25,000. Includes a sum of 25,000 paid to Anjali on 5th January 25. So general expenses includes a payment to Anjali on 5th January as commission for securing work from clients. Can we give such commission to Anjali? Yes, no issues. It's just a normal sales commission. This payment was made to her without deduction of tax at source. So we understand that in TDS there is a section of commission, that whenever you give commission to your any of the agent, then you should deduct TDS under section 194H. Even if you don't remember this section, that is perfectly fine. But this you should know that there is a section on commission. So that TDS has not been deducted. So if the TDS has not been deducted, then we will disallow 30% of this sum. So how much is the amount? 25,000. So into 30%, 7,500 will be disallowed. Everybody, I believe, okay at this? 40 small a, this will be disallowed. Next, written down value of the depreciable assets as on April 24 was as follows. So it means the depreciation which they have given to us, it's as per the books. Now, as per income tax, we will calculate first. They will calculate, then we'll allow it. So how much is the depreciation? On professional books, 90,000, on computers, 35,000. So they both are depreciated at 40% rate. So you can club them together 130 and charge 40% depreciation. So, sixth, a new furniture as appearing in the income and expenditure account was purchased on 31st August 2024. So we have purchased a new furniture and was put to use on the same day. The payment was made as under. So actually they have purchased the furniture. So now they are talking about this 48,000. We understand it's a capital expenditure. It will be disallowed. Only the depreciation will be allowed. The payment was made as under. 18,000 paid in cash at the time of purchase of new furniture. So 18,000 we have paid this amount in cash. 19,000 paid by account pay check on 5th September 24 as balance cost of new furniture, and 18,000 was paid in cash. 19,000 is paid by check. 11,000 paid in cash on 31/8/24 to the transporter as freight charges for the new furniture. So 11,000 we have paid to the transporters as transportation charges. So we understand cost of any asset includes its purchase cost also, and any installation or transport charges also which we have incurred till the date it is put to use. So 18 plus 19, 18,000 is paid in cash, 19,000 is paid by check, 11,000 is paid to the transporter. So that will also include in the value of the machine. So it would be 19, 20, 30, 40, 48. So 48,000 is actually matching with my price. Tell me out of this, which one is not allowed? 18,000 is paid in cash, by check 19,000 is paid, and this transportation expenses to the transporter, we have paid 11,000. To the transporter, we have paid 11,000. Tell me out of this, on how much you can claim depreciation. On how much you can claim depreciation. Everyone? Okay. So some students are telling me 18,000. Some students are telling me 18,000 you can claim or 18,000 you cannot claim. Those people have tell me on how much amount I can claim depreciation. Satish and Aditya, on 18,000 you can claim or 18,000 you can't claim. Not claim. Okay. Can't claim. Correct. Okay. So everybody is telling me, sir, 18,000 is paid in cash, so I can't claim it. And we can claim it on 19,000, which is paid by check. That is okay. And to a transporter, you are saying that we have a limit of 35,000, right? To a transporter, we have a limit of 35,000. Okay. I think, guys, I have told you. In case I have not told you, please write it again quickly. Everybody, cash payment in excess of rupees 10,000. If it is a revenue expense or it's a capital expense. See, revenue expense. If it's a revenue expense, there is a section 48.3 only covering revenue expenses. So we have a section 48.3 which covers revenue expenses, and it says that more than 10,000 is not allowed. It says more than 10,000 not allowed. In capital expenses, we have section 43.1, which is actual cost. For capital expenses, we have section 43.1, which is actually actual cost. That what should be the actual cost of the asset. It also says the same thing. If any cost has been incurred, which is more than 10,000, not allowed. Agree? Revenue expenses more than 10,000 not allowed. Actual costs for capital expenses 48.3 is not there, but actual cost section 43.1 says that if you have incurred more than 10,000 is not allowed. Then 48.3 has certain exceptions. It has certain exceptions that in some cases it is allowed. First exception is to a transporter. To a transporter, we can pay up till 35,000. And we have some other exceptions also. Other exceptions when we are purchasing from a farmer or any other person, for if he is making handicraft goods without aid of electricity, or he does not have a bank account in his bank, or we are purchasing agriculture produce from him, then there are exceptions that you can pay any amount to them. So in 48.3, there is an exception that to a transporter you can pay up till 35,000. It's okay. But guys, I'm sorry to say, but in 43.1, there is no exception. In 43.1, there is no exception. It means 10,000. If less than 10,000 or up to 10,000, then okay. If it is more than 10,000, no. There is no exception. Now, please tell me, right now we are talking about revenue expenses or capital expenses in this question. When we have purchased a furniture, we are talking about revenue expenses or capital expenses. We are talking about capital expenses. Correct? Now, I'm repeating my question. It's a capital expenses. Tell me my actual cost. Tell me my actual cost. Cash, wherever cash is more than 10,000, we will not take it. Cash more than 10,000, we will not take it. Transport expenses more than 10,000, we will not take it. 35,000 is not on capital expenses. 35,000 is an exception of 48.3. 48.3 is for revenue expenses, not for capital. So only and only the amount which is not paid through cash but check, that is actually my actual cost. So my actual cost for the purpose, my actual cost will become 19,000, and I can claim depreciation only on my actual cost 19,000. Everybody got it? So my actual cost is equal to 19,000. Okay. So what I'll do, first of all, from my PGBP, I will disallow 48,000. Then I will give depreciation of 19,000 rupees into, what is the rate of depreciation of furniture? 10%. So we'll give 10%. And when it is, so it is purchased before October now, so full depreciation. Now, next point, 7th point. Ashish purchased a car on 2nd April 23. So he has purchased a car in previous year, 23-24. Not in this year, some last year he has purchased. For personal use, for 3,35,000 for personal use. Okay. So it's a personal car, right? However, on 30th-4-2024, 34-2024 is previous year, 24-25. He has purchased it in this year. Now they are talking about this year. Next year they are talking of. They are saying he brought the said car for the use in his profession. Now, because from personal, he is bringing this car in PGBP. Correct? The fair market value of the car as on 34-2024 was 2,50,000. The market value is 250. Guys, please tell me why they have given this point, what we need to do of this point. So there was a personal car earlier, and now we have brought this into our business. And they were saying that the original value of this car was 335 last year. And now in this year, we have brought this into our business. And the market value of this car is 2.5 lakh today. Tell me why first of all, tell me why they have given this point. Forget about the amount. Tell me why they have given this point. Those are correct for computing depreciation. Very nice. For computing depreciation. Very good. Very, very good. Now tell me how much is the rate of depreciation on car? 15%. Normal, it's a normal car. If it is used for hiring business, then 30. Otherwise, 15%. Plant machinery, 15%. Okay. Now 15% of what? Tell me 15% of what? Now you all are correct for computing depreciation. 15%. 15% of what? 15% of what? 335, 250, or after subtracting deemed depreciation of last year. Because this asset was purchased last year and this year we brought. So my options to you is A, 335, thousand. B, 2,50,000, which is the fair market value. C, it will be 335 minus deemed depreciation. Deemed depreciation of this year and whatever is the balance on that. A, B, or C. A, B, or C. Very good. It would be A. It would be A only on the original cost. Guys, we have 43.1 is actual cost. I've told you now there also 43.1 is for actual cost. There is an explanation to actual cost. I'm writing it here. You can also write it here. Those students who don't know, you can write it over here. There is an explanation number 5. You don't have to remember the number. No issue. There is an explanation 5 to 43.1 which says that if a building, if your personal building, only with respect to building, not with anything else. If your personal building, you brought it into your PGBP, you bring this into your own business or profession, then the actual cost would be, actual cost of building will be the original cost minus deemed depreciation. Deemed depreciation means calculate depreciation from the very beginning and now tell me what is the value is. That on that you have to compute it. So had it been a building, this car, let's say it's not car, it would have been a building. So what I would have done is the building is 3,35,000 originally minus how many years it was used earlier? 1 year. So I would have claimed 10% depreciation on the building. 33,500 and the reduced value, not the market value. Market value will never take. 335 minus 33,500, this value I would have charged depreciation. Now this explanation is only for building. Now we don't have any other explanation in 43.1. So the interpretation is that on all assets, it's not my interpretation, it's a general interpretation of the institute interpretation, everybody's interpretation is that this explanation is only for building. For any other asset, for any other asset, so whenever you will bring this into your PGBP, for any other personal asset, which you will bring it to your PGBP, it should be recorded only at its original cost. It should be recorded only at your original cost. Everybody done? Have you written this? Understood? So had it been a building, I would have claimed deemed depreciation. But if it is other than building, it would be recorded at original cost only. So this year when we will record, it will be recorded cost only 335 and we will be charging depreciation on 3,35,000. And on car, we have 15% rate. So here the answer is 335. Ashish has made a contribution of 1 lakh in PPF account. PPF is 80C. The gross professional receipts of Ashish for the last year is 52 lakh. So last year they are saying that the gross receipts were 52 lakh. So he is a professional. More than 50 lakh. We understand he is a big professional. So there was some point of TDS. So he is required to deduct TDS also. Compute the total income. Okay. Now you have to compute the total income. Guys, please start yourself. Please start yourself. Compute the total income. Now it's time. It's day 9 today. You will do and I'll watch. Please start yourself. And if you are comfortable, you can also open your camera so that I can see that you are doing. If you are comfortable, you can open your camera. And it will be good. I would highly appreciate. This is uploaded on G Drive if you want, and if you want, I can send you the PDF also. Just give me a moment. I'll be sending you the PDF if some students doesn't have it. And please let me know when I have to change this screen. So everybody have also sent you the PDF. So we have income from IFOS also. We have income from PGBP also. We don't have salary income. We don't have capital gain. We don't have correct salary and house property. We don't have salary, house property, capital gain. We don't have. You can also open your PDF if you want. I've also shared with you. Solution number 6. computation of total income and tax liability of Ashish, assessment year 25-26, and this is optional regime he's following. So he has income from PGBP. He does not have income from salary in either house property. Now he has PGBP income. For PGB, we'll make working note number 1. Then he has IFOS income also. Correct? IFOS income he has. See, interest from PPF, we will write it over here, but then we'll say exempt. So interest on PPF is an exempt income. Now, no need to give the note because we have already mentioned. Interest on saving bank account, interest saving account, we have. Then NSC interest also. First of all, please make it your income, then give 80C reduction also. 20 and 21. Then we have no other IFOS income, I believe. Correct. No other IFOS income. So it is 41,000 is the IFOS income. Then we will compute the GTR and less deductions under chapter 6. Everybody doing with me? Make a working note for PGBP 1. First working note for PGBP. You guys, you have to do yourself, right? For just for 1 or 2 things, you can look at the screen. I would request you to do it yourself. Net profit as per P&L account. $39,43,000. Then step number 1. So right now we are not looking at step number 4, not the information, just the debit side, just the debit side. Employee remuneration, we are okay. Office admin, we are okay. General expenses, we are okay. Electricity expenses, we are okay. Medical expenses, although we found it personal, if you want to disallow it right now, you can disallow it. Medical expenses, or you can disallow it later when you will see the information. Up to you. Purchase of furniture is a capital expenditure. Purchase of furniture, I'll not allow it. Depreciation, as of now, we are okay, but then we'll look at the information. Number 4, step 4, then we will disallow that. So right now, although I know medical expenses is also disallowed, so if you want, you can disallow it right here, or if you want, you can disallow it at point number 4. Step number 4. Purchase of furniture, I'm disallowing it 48,000 because it is prima facie. It's a capital expenditure. Purchase of furniture, 48,000 I will disallow. Medical expenses, it is up to you that you want to disallow it right now or not. Depreciation is up to you, you want to disallow it right now or not. I'm just looking at my step number 1, expenses side. So as of now, I am okay with most of the expenses. On the credit side, it's very important. Most of the students forget to subtract it. Please don't forget that. So on your credit side, you have consultancy charges, you are okay with it. But these 3 income are not PGBP. First is not even an income. The last 2 is an IFRS income. But anyways, all 3 are not PGBP. So just subtract it. Less PPF interest. 60,000 is not PGBP. Then saving account interest. And then NSC interest. 20,000 minus 21,000. So we are done with step number 1. Step 1, net profit. Step 2, expenses side. Step 3, income side. Now, step number 4, information. Now let us do the information one by one. Family planning expenses 20,000 is not allowed. So I'll add anything which is subtracted, please write that in bracket. Add. Because these family expenses are debited, but it is not allowed. Family planning expenses. Very good, Aditya. You have given me 399,5350. Okay, let me see if it's correct or not. Family planning expenses would be disallowed 20,000. Payment of salary. What you will do for payment of salary to sister-in-law? Please allow it. There is no problem. So I will either you can mention it as a note or you can mention it right here. Let's see. I'll mentioning it right here, but I will write dash over there. Correct. So payment to sister-in-law allowed. Non-relative. Simple. So I'm writing dash. So for sister-in-law, the payment which I have made, we are allowing it because she is a non-relative. That's it. Dash. In your examination, please mention like this. Now, no need to give the separate note. You have already considered it. Amount received by Ashish as employee contribution. So we'll make it as income. Kishore, very good. 39.95, 350. Both her answers are matching. Aditya, Kishore. 10,000. This is employee contribution. After due date of PF Act, not due date of ROI. ROI is employer contribution. This is the employee contribution. So 10,000, I'll make the income. Medical expenses, that is a personal expense now. Guys, Aditya, Kishore, and everybody who has done it, please do the entire question now. Compute your GTI, the total income, then the tax liability. Medical expenses, these are personal. Because I have not disallowed it earlier, now I am disallowing it, 80,000. But I will give 80D over here, right? 80D I will give. General expenses 25,000 paid without TDS, 30% is disallowed. Commission without TDS. $7,500 I will disallow. Then depreciation, professional books and computers, I can charge 40% directly. Depreciation on computers and books, or I can write like this, depreciation on, first of all, depreciation as per books, I will disallow. This depreciation is not correct, 90,000. And less depreciation as per income tax, Computer and books, 90 plus 35, 125 into 40%. I believe 50,000 will get. Yeah, correct. 50,000 is a depreciation on this. Then on furniture, I will take only on 19,000. 10% of 19,000. 1,900 is the depreciation. And car, original cost into 15%, 335 into 15%, 50,250. That's it. And I have missed this. Yeah? Minus 48. Thirty-nine 43 plus 48,000. Correct. My calculation was going wrong. Correct. Now I calculate correctly. 99, 39, 95, 350. Correct. PGBP. Very good. Very good. 39, 95, 350. Everybody has done the PGBP. 39, 95, 350. GTI is 40 lakh, 36,350. Now, ATC, ATC is PPF and NSC reinvestment, 21,000. PPF was 1 lakh. NSC reinvestment is 21,000. 1,21,000. Then we have FTD rupees 80,000, but maximum 50,000 for father, 50 and 80 TTA also. Now we are having saving account interest 20. A, saving interest 20, or B, 10,000 is the limit, whichever is lower, 10,000. Subtract that, 38,55,350 is the total income. It does not have any long-term capital gain. It does not have any special income. So I believe that you can easily calculate the tax liability. Correct. ATC is 121, Shagana. Correct. Everybody done? Good, good, good. One double zero seven 86. 1007870. Correct, correct. Tax at slab rates. Very good. Anybody wants to show me any of the screen I can show? I believe that most of you have done that already. You guys are faster than me. Good. Okay, understood now. Let us come to next question now. Everybody, next question. From the following particulars furnished by Ganesh, age 58 years, a resident Indian for the previous year ended 31st March 2025, you are requested to compute his total income and the tax liability under the normal as well as the special provisions AMT, if any, applicable to him for the assessment year 25-26. He does not opt for the default regime. Okay. So he is opting for the optional regime. I'm again repeating. These particulars are of Ganesh, who is age 58 years, not a senior citizen. You are requested to compute his total income. We need to compute his total income and the tax liability under normal as well as AMT. Okay. And he is not following default regime. Everybody, please write with me. AMT, alternate minimum tax, it is applicable to all assessee, except companies, it is applicable to all assessee except companies who are claiming deduction under, who are claiming deduction under section 10AA or section 80 IA to 80 RRB. Guys, 80 IA to 80 RRB, most of the sections are not in our course. So what is relevant for us is 80 JJAA, QQB or RRB. This is for intermediate. So whenever there is it is applicable to all assessees, and mostly guys for us for intermediate level, we are more concerned with individual assessee. So obviously it is applicable to individual. Only to that individual who is claiming either 10AA or it can be both also. Any one of them who is claiming 10AA or who is claiming reductions from 80 IA, IB, IC, etc. to QQB, RRB. But in our course, all sections are not there. We have sections only 380 JJAA, QQB and RRB from this topic in our syllabus. So if we will see that if the assessee is claiming any of these sections deduction, or if he is claiming section 35 AD, specified business, only on such person who are claiming these three deductions, only on those person who are claiming these three deductions plus their adjusted total income, is more than rupees 20 lakh. Only on that person AMT will be applicable, and AMT is applicable only under optional regime. This is not a concept of default regime. So if you are following optional regime, then only AMT is applicable, alternate minimum tax. And if the assessee is not following optional regime, they are following default, then please don't apply the provision of AMT. Then AMT has no role, correct? So AMT has a role only when you are following optional regime. So in this question, actually, we have opted out from the default regime. So we are following optional regime. So AMT can be possible. So they are saying that also please calculate the tax as per the AMT also. Okay. Now, everybody has written this or not? First of all, tell me. Very good. Very good. Now, so we understood this point. We understood this point. We don't understand what is adjusted GTA, adjusted total income. What is adjusted total income is? It's simple. What is adjusted total income? So you have to adjust your total income. Just take your total income, whatever is your total income. Since assessee is claiming these reductions, just add back these deductions. Just add back in your total income. So in your total income, add back section 10AA deduction. Also add back for your examination intermediate if the assessee is following QQB or if he is following RRB or JJAA. QQB is royalty on books, RRB is royalty other than books, JJAA is for new work. So if the assessee is claiming these reductions, just add them back. Plus if assessee is claiming 35 AD deduction, what it is? Specified business, 14 specified businesses. where you claim 100% reduction on capital expenditure, where you claim 100% reduction on the capital expenditure, just add it back. But when you add it back, guys, this would be very rare. It will come very rare. It will come. Generally, AMT is also, it's not that important topic now because it is not in default regime now. But still, we never actually leave it. We should have to do it. So we never know that if it comes or not. So we should know about this. And it's a very, very easy topic. I'm telling you, it's a very, very easy topic. So just add section 10 AA, QQB, RRB, GGAA, and 35AD. And if you are adding back 35AD, see what is 35AD? If you have purchased a machine for rupees 10 lakh, then in 35AD business, for example, it is a cold chain facility, it is a 2-star or above category hotel, it's a hospital for 100 beds and above. So if you have purchased a plant machinery for that, 10 lakh rupees, you claim 100% reduction. Correct? You don't claim depreciation, you claim 100% reduction. What you have to do is just add back. When you are calculating your adjusted total income, just add back that deduction. But normally, people will claim depreciation now, because if somebody is not into specified business, so at least if somebody purchase plant and machinery, they claim depreciation. So they are actually telling us that compute your income normally. So what we have to do is, so if we have added back 35AD, then we will subtract the deemed depreciation also on such assets, which we would have charged normally, So at least, and this you have to do for this particular point. So if you have 35AD in your question, just add back 35AD and subtract the depreciation what would have been. So let's say it's a machine of 10 lakh, and obviously on capital expenditure 100% 35AD, you must have claimed 10 lakh rupees. So please add back 10 lakh rupees. But normally you would have given him a depreciation of 15%. So how much of 10 lakh 15% is 1.5 lakh? Just subtract 1.5 lakh from it. You will not get this, but everybody understood it. How I'm computing my adjusted total income? This is your adjusted total income. This is your adjusted total income. Everybody understood it or not? How you will be computing your adjusted total income? Add back 10 AA, add back QQB RRB, add back 35AD. And when you add back 35AD, because it's a capital expenditure, at least give normal depreciation. Done? Okay. Now, we have to compute, and if we have to compute the AMT, also please write out what is AMT. Alternate minimum tax would be 18.5% of adjusted total income plus surcharge, if any, plus 4% cess. This would be your AMT. 18.5% of adjusted total income plus surcharge, if any, plus 4% cess. So you have to see that how much is the tax as per AMT, how much is the tax as per normal. If we will be computing our normal income without this AMT, normal tax on total income, how much is the tax normally, how much is the tax AMT, whichever is higher you have to pay, whichever is higher you have to pay. Have you written this or not? Everyone done now? All done? Okay. Now, he occupies. Let us look at the question now. He occupies ground floor of his residential building and has let out first floor for the residential use at an annual rent of 288. He has paid municipal taxes of 60,000 for the current financial year. So we understand that he has a house property. Okay. He owns an industrial undertaking established in SEZ. So he has a unit in SEZ which was commenced operation during the financial year 2021. The total turnover of the undertaking was 200 lakh, which includes 140 lakh from the export turnover. This industrial unit fulfills all the condition of 10AA. Profit from this industry is 25 lakh. So we understand that he has PGBP income also, and we will give 10AA deduction also here. So I think most of you know already about 10AA, how much deduction we will give it to him. If any student doesn't know 10AA, so don't worry, I'm explaining it to you right now. Then he received royalty of 2,88,000 from abroad for books. So he is receiving royalty also. Royalty, you can take it as an IFOS income. You can also take it PGBP, doesn't matter. I would recommend IFOS income, royalty. And we will give him 80 QQB also. Why? Because it is royalty on books. So he received royalty amount this much. So this point is regarding royalty. He received 40,000 as interest on saving bank deposit. So this is IFOS income. So saving bank again, IFOS income. And we will give 80 TTA TDB. So this is person is not a senior citizen. So we'll give 80 TTA again. So here again it would be 80 TTA. He also sold a vacant land on this date. Just tell me on which date he sold the land. November 24. Pre-budget or post-budget? Pre-budget or post-budget? Is it pre or post? He sold his land this date. Post-budget. Okay. So this is post-budget. So no indexation. And everything is related to capital gain. Okay. Then 6 point. He paid the following amount out of his taxable income. Insurance premium 39,000 for the insurance policy of this son who is not dependent on him. Guys, even life insurance policy you get for ATC, even for your children, either they are dependent, non-dependent, doesn't matter. For parents, it should be no. Life insurance premium of parents are not allowed in ATC, only health insurance is allowed. So it is life insurance. For son, for children, dependent, non-dependent, it is allowed. ATC, we will get it. Insurance premium 48,000 on the policy of his dependent father. So insurance premium 48,000 policy of his dependent father. So they have not given what type of insurance premium it is. So we will assume over here because they are talking about life insurance. So we will talk about life insurance is there and we will not allow this in ATC. Because in ATC, parents are not allowed. So if you assume it as a health insurance, which I should not assume because earlier they have given life insurance for the son. So if this is a life insurance, we will not allow it in ATC. Tuition fees of 42,000 for his 3 children to a school. The fees being 14,000 per annum. So we understand again ATC we will get for tuition fees, but maximum for 2 children. Maximum for 2 children. And please remember in ATC, this tuition fees is allowed only for education in India. If it is outside India, then we will not allow. But 80E, education loan can be for outside India also, no issue. But ATC should be, this tuition fee should be in India. Nothing is mentioned, so we'll assume that it is in India. So ATC, he will get for his son's life insurance, for father, it will not be available. Tuition fees, 14,000 for 3 children, but we will allow only 28,000 for 2 children. Okay, that's it. My question to you is, from which head he does not have an income? From which head he does not have an income? Whatever we have learned. Okay, see one by one. Salary. He has income from salary or not? Do we have his income from salary? Salary we have not seen anywhere? No. House property we have seen first point. PGBP we have seen he has an industrial unit. Third, fourth, capital gain we have seen. Salary he doesn't have. PGBP he has. Capital gain he has. IFOS of course he has. So he has all four heads except salary income. Understood? And we have to compute. And he is claiming deduction under 10 AA also, QQB also. So even if anyone would have been there, there would be a provision for AMT as well, provided his adjusted total income is more than 20 lakh. AMT we'll see later. First of all, we'll do the question normally. Everybody with me. Question number 7. Solution 7. Everybody, please with me. We have to compute the total income and the tax liability. Computation of total income and tax liability of Mr. Ganesh. Assessment year 25-26. And we are following option regime. As of no empty, normally. He does not have salary. He has income under house property. Income under house property. Everybody is doing with me? Now, the first point says he occupies the ground floor of his residence building and has let out first floor. So he has two floors, one floor self-occupied, second floor let out for residential purpose at a annual rent of 2,28,000. This is not per month, it's an annual rent for 1 year. For his first floor, he has paid municipal taxes of 60,000 for the current financial year. Okay. Quickly make a quick working note for house property. Working notes. 1. House property. Ground floor. Self-occupied. First floor. Let out. GAV minus municipal taxes. We get NAV. Then standard deduction 24A. If you remember the section, then you can write, otherwise no problem. Standard deduction. 24B is interest on loan. I don't think that we have any interest on loan. For self-occupied property, I start with NAV nil. 24A 0. 24B is also 0. So for self-occupied property, I'll get nil because there is no interest on loan. There is an optional interest on loan could be allowed up to maximum 2 lakh or 30,000 in case of self-occupied property. But since there is no interest on loan, so it is 0. In default regime, we never allow for self-occupied property. For let out, so it's okay. But for self-occupied, we never allow. Okay. Now the GAV of the first floor, they have not given the expected rent, and 90% of the cases they will not give the expected rent. They will give the actual rent. So actual rent is 228. No, it's not per month, it's annually. So please be sure, don't multiply it by 12. It's 2,28,000. Municipal taxes paid of the house was 60,000. So can I subtract 60,000 from here? No, because it is 2-floor property. So proportionately for the first floor, it is 30,000 rupees. So this gives me 1,98,000 rupees. 59,400 is 30%. 138, 600. That is the house property income. Everybody has done it. That is a house property income. Let me know once done. Very good. No issues. Now, interest income under house property we have done. Working note 138, 600. Then PGBP we have. We don't have to make a working note right now. We have directly PGBP. I'm reading it. He owns an industrial unit in SEZ, which was commenced operation in 2021. The turnover of the undertaking was 200 lakh. Why they have given the turnover? For 10 AA. The total turnover is 200 lakh, which includes 140 lakh from the export turnover. So 140 lakh is export turnover, 10 AA. The industrial undertaking fulfills all the condition of 10 AA of the income tax act. Profit from the industry is 25 lakh. Okay, this is what I need right now. So what is the PGBP income? 25 lakh. How much is 10 AA? I will see later. I will see later how much is 10 AA, but profit from this business is 25 lakh. So I got my PGBP and nothing else is mentioned now regarding this business. So we have our PGBP as 25 lakh. Everybody understood profit from this industry is 25 lakh. So I will simply write my PGBP income is 25 lakh. No issue still here. Some people just subtract 10 AA from here, but I am telling you that 10 AA should be subtracted from GTI, not from this right now. Some people subtract it right here. Please don't do this. Subtract it from GTI. Although it would not be that wrong, but my recommendation is please subtract it from GTI. Have you all understood why I have written 25 lakh over here? It's a profit from this industrial undertaking. What it is, it's my PGBP. Whatever is my deduction of 10 AA, that I'll give. That's okay. But my PGBP income is the profit for the year. 25. All good to go? Then we have a capital gains also. He received royalty. Royalty will go in IFOS. Fourth is 40,000 interest on saving bank account IFOS. Fifth point. Look at the fifth point. He also sold his vacant land. He also sold his vacant land on 10th 11/24 post budget. Post budget. The stamp duty value of the land at the time of transfer is 14 lakh. The stamp duty value was 14 lakh and he has sold for 10 lakh. Guys, FMV of the land as on April 2001 was 4 lakh. This land was acquired by him for 1.8 lakh in 1995. He has acquired it before. He has incurred registration expenses at 10,000 at the time, at that time. Okay. The cost inflation index is given to you. Okay. First of all, tell me, he has sold the land for 10 lakh and its stamp duty value is 14 lakh. First of all, tell me how much is the sales consideration. Go one by one. Tell me how much is the sales consideration. Full value of consideration. Capital gain. Everybody is okay with 14 lakh. I'm doing it right here because I believe that it's a very small capital gain. So we can do it right here. Full value of consideration. Since stamp duty value at the time of sale is more than 110% of selling price. Everybody know na section 50C. Since full value of consideration is more than 110% of the selling price. So we will take 14 lakh. Selling price is 10 lakh. SDV is 14 lakh, which is more than 10%. So we'll take 14 lakh. Minus cost of acquisition. Since it is post budget, I cannot index it. I cannot index it right now. So it would be cost of acquisition. Since this asset is purchased before 2001, before April 2001, and how much is purchased it for? It was purchased in 1995. It was purchased in 1995 for 1.8 lakh, and 10,000 we have incurred at that time. So I always tell you that whatever the expenses which you incur at the time of purchase becomes the cost of your house, right? So the cost of the house is 1.8 lakh plus 10,000, 1.9 lakh, correct? So cost of acquisition is, actual cost is 1.8 lakh plus 10,000, 1.9 lakh is the actual cost. You have the fair market value as on 1/4/2001 also, because we know that any asset which is acquired before 2001, we can take the fair market value of 2001. In case of land building, we have to compare also. If stamp duty value would have been given, first of all, I would have compared as fair market value with stamp duty value. Whichever is lower, then it should be compared with A, whichever is higher, right? Because it is A or B, cost of acquisition would be actual cost or fair market value, whichever is higher. But I'm telling you, in case of land building, if you remember, in case of land building, I told that instead of fair market value, we should also compare with this B point, which will have two parts: fair market value and stamp duty value. First of all, whichever is lower, then compare with the actual cost, whichever is higher. Now, the value of the asset was 1.8 lakh. Actually, we spent 10,000 we spent on registration, so it will become 1.9 lakh. And the fair market value of this land is 4 lakh. SDV is not given, so it's no problem. So 4 lakh is the fair market value. We'll take whichever is higher for the beneficial of the assessee. 4 lakh is the value. So my long-term capital gain is coming as 10 lakh. Everybody is okay with this. My long-term capital gain is coming as 10 lakh without indexation. Tell me if you are okay with this. Indexation we'll see later, Raju sir, not right now. For calculation, we will not see indexation. For calculation, we will not see indexation. Okay. So it is 10 lakh. Now, we are done with this. He paid amount, that is 80C. Anything left with us? Yes, IFRS income is still left. So our IFRS income would be first we have done, it is for house property. Second, we have done, it is for PGBP. 10AA will take care. Royalty. Look at this, royalty. Guys, first of all, normally, please make royalty normally. Whatever is your income on royalty, please make it your IFOS. What is income on royalty? Any royalty which you receive, any royalty you receive. Forget about that 15% also. That 15% you should consider while giving 80 QQB. Right now, you don't have to consider that. Correct? So right now, whatever is your royalty income, After expenses, make it your IFRS. That's it. Just exclude the expenses, right? Don't be don't give any concentration to 15%. Don't consider any whether it is received within 6 months from the end of the year or not. No, that is everything is of QQB. Right now, while computing your income, whatever is your royalty income minus expenses, whatever it is 15%, 20%, 30%, 50% doesn't matter right now. Please make it your IFRS income. So it is written over here. Just look at it. Let me erase everything first. He received royalty of 288. Okay. He received royalty of 288 from abroad for a book authored by him on the nature of artistic. That's fine. The rate of royalty is 18%. Doesn't matter right now. I will be using it in my QQB. Doesn't matter right now. And the expenditure made for earning this royalty was 40,000. The expenditure made was 40,000. Okay. These 2 points are relevant for me right now. What is the income? What is the expenses? The amount remitted to India till 30th September 25 is 230. Right now, it is not important. You see 40,000 is interest on saving. This is second thing. First of all, how much is my royalty income? 288,000 minus 40,000. 288 minus 40,000. Just make this your income. Royalty income is 2,88,000 minus 40, 248. Correct? Then he received 40,000 as interest on saving bank deposit. Saving bank is also IFRS 40,000. 80 TTA will also be there. Then he sold his vacant land. We have done. That's it. So he has 2,88,000 as his IFRS. Everybody tell me how much is my GTI? Tell me how much is my GTI? $39,26,600. Correct. 39,26,600 is my GTI. Once you get your GTI, then you can give your 10AA. Less. Now, deduction under section 10AA. Guys, what is 10AA? 10AA says that the profit which you is earned because of export, that is a deduction. Simple. The profit which you have earned, the profit which we have earned here is 25 lakh. The profit which you have earned over here is 25 lakh. So it says the profit which you have earned because of export, that is a deduction. Okay. So how much profit out of this you have to proportion that how much is from export. So 10AA says he owns an industrial undertaking established in SEZ which has commenced operation on this date. Total turnover right now, don't worry about the date. Total turnover of the undertaking is 200 lakh, out of which export turnover is 140. So out of total turnover of 200, our export turnover is 140. So it means that 70% of our turnover is through export. So if 70 is 140 divided by 200, correct? So 70% is through our export. It means that whatever the profit this undertaking has earned, 70% is through export. Got it? So if they have earned 25 lakh into 70%. So what we'll do it? 10AA would be, they will say that how much is your total turnover? 200 lakh. out of which how much is your export turnover? 140 lakh. Got it? What it is? What is this? 70%. This comes 70%. 140 divided by 200 is 70%. So its case 70% of your turnover is through export. It means that how much is my profit? It means 70% of, this is 70% guys, of 25 lakh, it is my coming through my export. This is the deduction we'll get. And if we are in the first 5 year of commencement, if we are in the first 5 years of commencement, we will get 100% of this. If we are in next five, we will get 50%. That's it. For last 5, there is one more limit also, but that will not come. That never came in examination. It will not come. Just remember, for first 5, it is 100%. For next 5 and next 5, next 10, total it is 15 years. 5, 5, 5. Just make it simple. For first 5, remember 100%. 99% of the chances that you will get first 5 years. 1-2% are the chances that you can get any year between 6 to 10. You will not get 11 to 15. But that is also, if nothing, you remember, just apply 50%. That's it. So if it is in first 5, then 100% of this. Now let us see that whether we are in the first 5 years of commencement or not. See, our previous year is 24-25. This is our previous year. And we have commenced this business on 2021. So 2021 is the first year. 21-22, 22-23, 23-24, and 24-25. We are in the 5th year. So it means, yes, we are in the first 5 years. Everybody is okay with this? So we are in the 5th year. So that is the reason, no issue. 100% we can take. Had it been in the 6th year, I would have taken 50%. Right? So here it will be 17 lakh 50,000 would be 10 double A. All good? Everybody is okay with this? This will be 10 double A. First 5, 100%. First of all, see that how much is your profit is coming through export. How much of the profit is coming through export? How we'll see? We'll see that percentage of export turnover, that is 70%. 70% into profit, that is the coming from export, into 100% or 50%. This you will get. Okay. 10 double A we have given. Any other deduction do we have? 10 double A we have given. Royalty, 80 QQB. 80 QQB we have. Royalty. How much is the royalty income? A, B. QQB. How much is QQB? QQB is your royalty income minus expenses. And B is rupees 3 lakh is the fixed limit. Whichever is lower. Whichever is lower is QQB. Correct? 3 lakh is the fixed limit. B. A. Royalty income minus expenses. We already have expenses, I believe 40,000, right? Everybody is okay with now? 40,000 rupees. We already have expenses, we have seen. 40,000 is the expenses. Now, when you will take this royalty income, it should not be more than 15% of the value of the goods. It should not be more than 15%. Now, 15% you are looking at first time over here. Guys, had it been RRB, I will not take 15% then. I will take whatever the royalty is. But in QQB, there is a point of 15%. So this royalty, 2,88,000, we have read somewhere. We have read somewhere that it is 18%. Let me tell you once more. This was 18%, right? So 2,88,000 is 18%. So how much would be 15%? So you can simply calculate for me. 2,88,000 was actually 18%. So how much is 15%? Yes, 288 divided by 18 into 15, 240. So actually this should be 2,40,000 minus 40,000. So ideally, this should be 2 lakh. Don't write it. Ideally, it should be 2 lakh. 15%, 288 was 18%. See, when you are making it income above here, IFOS, so don't consider anything 15% or so. Whatever is your income, make it minus expenses. So it is here, QQB is 240 minus 40, 2 lakh. Correct? Everybody is okay. Now, it is 240, now it is 15%. We are good enough. There is one more point in QQB. If you can get it, in this question they have given. So it's good that you are revising all these things, QQB. In this question they have given that if this royalty is received, if it is royalty is coming from outside India, if this royalty is coming from outside India, then you should take only that royalty for this QQB, which is received within 6 months from the end of the year. See, end of the year is March. 6 months is April, May, June, July, August, September. So whatever is the royalty which you received from outside India, if it is coming from outside India, please consider only 6 months royalty. Okay. So although it is 240, if that point would not have been given, I would have given 240. But now they have given to me the amount remitted to India till 30th September. You understand why they have given this date of 30th September? 6 months from the end of the year. Is 230. So now they have said, please don't take 240 now. Maximum, had it been more than 240, then 240 is good enough. But now it is 230. So 230 minus 40, it would be 1,90,000. So 190 or 3 lakh, whichever is lower. So we'll get 1,90,000. Everybody is okay with QQB also? All good? Correct, Raju, sir, 190. Everybody is okay? Now, QQB we have done. 40,000 interest on saving bank account. Saving bank account, TTA, we will give. Correct, na? He is not a senior citizen. 80 TTA we will give. Saving interest or 10,000, whichever is lower. Saving interest was already 40, so we'll get 10,000. Correct? Okay, 40,000 interest taken. Sold is vacant property, that's okay, we have done. Insurance premium paid. 39,000 for the son who is not dependent on him, no worries, we can get it. So 80C. We'll get it for LIC of son. 39,000. For father, it is not allowed. And tuition fees. Tuition fees. I believe he has paid 42,000 for his 3 children, 14,000 each. But we can take maximum 14,000 rupees. And it's not per month, right? It is not per month. 42,000 fees. 14,000 into 2. 28,000 over here. $67,000. That's it. Tell me the total income. Tell me the total income. 39, 26, 600. 39, 26, 600. $19,09,600. Is it 19,09,600? Okay, very good. Now, before you compute your tax, guys, I have not introduced AMT right now. Just leave AMT for next 2-3 minutes. Just leave it behind. Now you know that if there is an individual, there is a special provision in capital gain. There is a special provision in capital gain. If you remember, the special provision is, this is important for your examination, what I'm telling you right now. So it is given that if there is an individual or HUF and they have sold only their land and building, if you want to write it somewhere, please write it. If there is an individual HUF, they have sold land or building post budget. If they have sold their land and building post budget, and they have purchased this land and building pre-budget, we have purchased for pre-budget. First of all, compute your capital gain normally without indexation. Why? Because you are selling it post budget. So we have computed it normally. See, without indexation, we have done it. 10 lakh. They say compute your capital gain normally. But at the time of paying taxes, you have two options. Do you remember this? You have two options. First option, either pay tax, because now the post budget is 12.5% long-term capital gain. Either pay tax 12.5%, obviously without indexation. Or you have an option number 2, pay tax 20% with indexation. That's it. So what is the special provision? The special provision for in capital gain is only and only for individual HUF, only and only for land and building. That's it. It is not on gold, it is not on shares, it is not on anything. For gold, shares, etc., 12.5% without indexation, that's it. No choice. Choice is only for land and building, that too only for individual HUF. Those who have purchased before and selling after the budget. For them, there is a choice. So now, if it is 12% normally, so we understand that how much is the capital gain, guys? 10 lakh. 10 lakh was the capital gain. So if I would have paid option 1, 12.5%, 12.5% to 10 lakh, 1,25,000 would be the tax. All okay? 1,25,000 is tax. And second, I have to take 20% with indexation, whichever is beneficial to me. Please write a note over here. Note number 2. Tax on long-term capital gain because it is land and building. Option 1, tax at a rate of 12.5% of 10 lakh. 1,25,000. Option 1. Option 2, tax at a rate of 20% with indexation. Okay. First of all, we have to compute the capital gain now with the indexation. Then we'll actually say how much would be the 20%. Full value of consideration, 14 lakh we have done. 10 lakh or 14 lakh was okay. So I'll not show it again and again. Simply I have to make a working note so that I can just compare the taxes. Minus index cost of acquisition. Why? Now we have to index it also. My cost of acquisition was 4 lakh and it was way back before 2001. CI of the year of transfer 363 this year. It will be given in the question. Into 100 into 4 lakh. How much it is coming? 14,52,000. There is coming a loss of 52,000. Long-term capital loss with indexation. No issues. Now tax at a rate of 20%. There's a negative figure. So it would be nil. So option 1 is pay tax 125 or pay tax nil. So how much will pay? Nil. It's an option to the assessee. So assessee will not pay tax on this 10 lakh. He will choose this option nil. And what will happen to this 52,000 loss? Can he set off this loss? No. This is just for the calculation purpose. This loss is not actual loss. No. we can't take this loss. This is just for the purpose of calculation we have done. Only to check that which option is good. So this one is the better option. 20% tax with indexation, nil. So on 10 lakh, we will not have any taxes. Everybody understood this or not? I need confirmation from everyone on this. I need confirmation from everyone on this. Good. Got it? Very good. Now, done now? Now. Now tell me the tax. See, now on 19 lakh 9,600 long-term capital gain, we have 10 lakh. We have done the option number 2. There would be no tax on it. So tell me the tax now. Tax on rupees 10 lakh LTCG. You can tell nil. Why? Because of working note number 2. Okay. Now tell me this income has 111A no, 112A no, 112 long term we have done, casual income no. Other income calculated, slab rates. Remaining income 9,09,600 at rate of slab rates. Calculate the tax. As per optional regime, na? 94,400. 94,400 plus 4% cess. So after that, it would be 98,176. Rounding of 98,180 you will get. All good? It is 94,420, na? 20 rupees I missed. Ninety-eight 196. 98 196, 98 200 would be round off. Correct? This is the tax. Everybody got it? That point was important. Now let us come to AMT. This is the tax. This is the tax as per the normal provision. So they have asked us that what is the tax as per normal provision? This is the tax. 98,196. And now let us come to AMT. The second part of this question is AMT. First, we'll see whether AMT is applicable or not. We see that AMT is applicable to those people who claim 10 AA. Yes, he is claiming. Either QQB is also claiming. 35AD is not claiming. So we'll leave 35AD, that's okay. But AMT could be applicable. So first of all, 10 AA, QQB, RRB, GGAA, 35AD. Any of one of them? Yes, we have 2 of them here. Second, if its adjusted total income is more than 20 lakh, then only you will apply AMT, right? So what is adjusted total income? Let us find out whether we should apply AMT or not. Adjusted total income is your total income plus 10 AA plus QQB plus 35AD. Total income was 19,09,600. 19,09,600 plus 10 AA. 10 AA, I think that we have taken 17,50,000. No? 10 AA we have taken, yeah, 1750. And QQB, how much we have taken? 190. So it is coming as 19,09,600 plus 17,50,000 plus 1,90,000. So we are getting 38 lakh 49,600. AMT is applicable. Since it is more than 20 lakh, AMT is applicable. Agree? So what is the conditions of AMT? Other than company, yes, individual can have. QQB, RRB, JJAA, 35 AD, 10 AA, yes, we have two of them, 10 AA and QQB. More than 20 lakh, yes, we have, correct Shagna. So now we can apply AMT. And what is the AMT amount? See, if this amount would have been more than 50 lakh, I would have applied surcharge also. Same rate of surcharge. But now there will be no surcharge, but 18.5% of adjusted total income, 38 lakh 49,600. 7,12,176. No surcharge, as this income is not more than 50 lakh, plus 4% cess. 28,487. 7,40,000. 663. Round off. 7,40,000. 660. So now it is 98,196 or this, whichever is higher. So we have to pay tax as per AMT. So tax would be 7,40,660 as AMT is higher. So we have to pay tax as per the AMT. Understood? Long-term AMT, see, Raju sir, what benefit you would have given in, it's a good question, but tell me what benefit you have given in AMT. What is the rate of capital gain in AMT? No rate. No rate, it would be 18.5%. So everything, so we'll not give the indexation there. Indexation benefit would not be there. So it would be same rate. So indexation benefit they told us normally in the normal there, they have not made any changes in AMT. Very smart move by Nirmala Sitharaman. So they want tax on AMT. They have not changed AMT because people were shouting in the parliament when she has taken this indexation. So, okay, let them shout. She made that changes there. But smartly, she didn't make any changes in this section AMT. Okay, got it, everyone. So your homework for today would be, so we have done most of the questions. Your homework for today would be, just do question number 8. Question number 8 is for SEZ. So we have already done 10 AA. So just revise question number 8. Then we'll continue tomorrow. Thank you so much, guys. And if you want to revise any of the questions which we have done today, yesterday, day before yesterday, you can revise that as well. Thank you so much. Bye. Take care. See you tomorrow at 7:30. Bye bye. Take care.